think it was Benjamin Franklin that said planning ahead is the best chance for success. And the bottom line is that when it comes to your tax return, there's two things you can do. You can report, that's what the IRS gets, that's what you pay, and you can plan. That's how you develop the story, the strategy that you're going to use for how you're going to do your tax planning. That has to happen before the end of the year. When you're talking about investing, if you're not considering your strategy for taxes, there's part of this that you're missing. And you may be saying, Joe, that's not true. All my money is in the 401k or in the IRA. Trust me, you still need to have a tax plan. It may not just be this year, but it will be your financial journey. Join us on Consider This program today. We'll break this down for you. Well, good morning and welcome to Consider This program. I'm your host, Joe Clark.
And I'm Grant Sullivan.
Grant, we are happy to have you along. Grant has got his degree in financial planning from the Purdue University. Notice it's like Ohio State. I've now made it the Purdue University. He is also our manager of operations for our financial planning team. We are talking about a topic that is near and dear to my heart. We started the Financial Enhancement Group back in 1997, and my focus from the very beginning, along with our co-founder, Don Hodson, he's an enrolled agent, had a tax practice, was how to do tax planning around investments. I think it's one of the largest things that is missed. Today, the theme of the whole show is when investing and taxes meet. You know, they get in the street, they get in a little bar fight. You know, things go on out there where one can really dismantle the other. You have probably been told by some caring individual somewhere in your life that don't pay attention to the taxes. If you're paying taxes, it means you made money. Don't pay attention to the taxes. Just let the investing work. The taxes will work themselves out. We never know what the tax code is going to be in the future, so you can't worry about it today. Folks, that probably came from a gray-haired gentleman who has great concern for you and your future. The problem is they're mistaken. And when you do not understand the impact that taxation has on your financial journey, that means both today and tomorrow. When you don't understand that impact, bad things can really happen in your financial future. I'll go this far. Before I let Grant start, I will tell you in 34 years of being in the financial services world, as a certified financial planner and the managing partner of the Financial Enhancement Group, where we manage more than $650 million as of the time of this recording, over 1,000 families we take care of. There is nothing I have seen disrupt a financial plan and a successful retirement like the misunderstanding of how the tax code works. So we're going to break it down for you today and go from there. So Grant, you've come up with a list for me of some things that you can prepare for the end of the tax year. Why don't you talk to us about that?
100%. And Joe, before I dive into that, I wish we had 30 minutes to talk about this topic because we've spent so much on it, even maybe more. And so as Joe talked about in the beginning, remember there's two key elements of tax planning. There's tax planning and there's tax reporting. Don't ever forget that. Reporting is when the clock strikes midnight on December 31st, we're done. We can't go backwards. So we're talking about planning today. And one of the couple key elements that I want to touch on for us is the families we take care of, Joe, get this beautiful little thing that we created called the tax package. The annual tax package goes out in October, and we're talking about income variability for our families. Because again, once you want to unwind it in January, February of the next year, it's too late. You can't go backwards. So we try to get people to think ahead of time, okay, what happened to my income this year that could potentially change my tax situation? Did you start taking Social Security? Did you get an extra bonus you weren't aware of? Did you get a pay raise? Some of the unfortunate ones, did you lose a spouse? Did you inherit property because of the loss of a family member? So these are income variabilities that we need to consider before year end because they have massive effects on your 1040. The second piece is when you're in a trigger or transition. We've seen this time and time again, Joe, and I know you could tell story after story through this, but we have families that either had a trigger and transition of a job loss, maybe earlier than they anticipated, and there was a buyout. Or maybe it was anticipated, but they waited to the end of the year. Now we only have November and December to do good planning with what income they created during the beginning of the year now with the mixture of their pension and Social Security. So there are so many factors that can absolutely affect your 1040. And I love the word you used, derail. Oftentimes families will come in and they'll either know taxes or they'll either know investing. And rarely do they ever mix the two together. And when you have things like capital losses, capital gains, maybe you sold a business or farm property and you have to write $1 million check for the taxes and you think, oh my gosh, I can't pay any more. Well, don't don't dig your heels in the ground too hard, because there could be good room for more tax planning. And so in another section, we'll get to kind of the bracket you're married to. But those are some of the key elements that we want our families to start thinking about in that tax package. Now, if you're a family that wants to work with us, you're not working with us yet, and you want to get some of that information, don't hesitate to reach out to our team, and we'll get that to you.
Yeah, you can get us at 800-928-4001 or go to yourlifeafterwork.com. When he says triggers and transitions, here's what I know for those of you that are listening to the show. And it really is a difference between the Financial Enhancement Group and a lot of other places that are out there. And I've been accused for the last 22 years that I've done this radio show that I give you too much, that I tell you what's going on. And folks, here's the deal. Not everybody is right for the Financial Enhancement Group, and the Financial Enhancement Group's not right for everyone. I can deal with that. I will do my best on this show to give you not just the cursory thoughts, but good information and education. I will always encourage you to go see a professional advisor, hopefully a fiduciary, and if it's not the Financial Enhancement Group, somebody else. Only a fool would be their own attorney or their own doctor, in my opinion. The same is true of a financial plan. I have somebody who helps me look at my stuff at the Financial Enhancement Group for very obvious reasons. We have a blind eye to our own things. But when he talks about triggers or transitions, what we know is about 65 to 70% of the time when people come to see us, they've had something happen in their lives that was either predictable, a transition, you left work, or you got married, one of those things. You reach 72 for required minimum distributions. Those are transitions, or they were triggers, things that happened. The loss of a spouse. Again, a marriage could be a trigger. Maybe you didn't know it was going to happen. The new grandchildren that were being born. All sorts of things that are there. And so what we really do is develop checklists to try to help you go through those situations. So you can always call us at 800-928-4001. Get signed up for your Next Steps meeting. You can sit down with Grant or somebody else on our team. We'll give you 90 minutes of a complimentary meeting where we'll give you things to consider today, things you're going to want to consider in your future. And if we choose to partner together, Grant will put into writing for you exactly what FEG will do for you. All right, Grant, back to you.
Absolutely. And kind of going into that, Joe, I want to spend the last couple of minutes here together talking about some of the things that we see at year end that can cause hiccup. So Joe has been part of the Ed Slott community for many years, was on the board, helped kind of found some of the strategies along with them. For those of you who don't know who Ed Slott is, he's one of the premier educators and I'd say think tanks in the IRA retirement space. And they came up with a beautiful article that I want to bring up today because it just tickled me pink. You know, a lot of times, Joe, we do want to give as much information as possible for people because we believe everyone deserves a fiduciary. We're not the right fit for everyone, but we do give out a lot of good information. One of the things that Ed, in his article he recently posted, put that I wanted to share with all of us today is if you're going to do this on your own, just be careful. Because a lot of times when families come into us after they've made some choices and they didn't bring on the right team necessarily, they go back, how can we, I had a meeting earlier last week and said, how do we fix this? How can we undo this? Unfortunately, it was last year. I can do nothing. No one can do anything. And here's the mistake. You ready? They heard some things and they said, oh, that's great. I want to create some Roth money. I've retired from my job. I don't have a Roth yet, but I'm going to open a Roth IRA, but I'll do the conversion in my 401k and then move everything after that. I'll just do it all in the plan, and then I won't have to worry about it. It'll be simple, easy peasy. Well, here's the problem with that. Qualified plans are required by law to do or withhold 20% federal taxes anytime an indirect distribution is ever made. And this individual was not in an effective 20% tax rate. So they overpaid the IRS. Now, I love the intention. Love it, right? Trying to create tax-free growth money in an adaptive tax code to tax market. Love it. But again, not as efficient as possible. And so when we talk about these strategies, just make sure you do due diligence before you start taking action on things because, as Joe said, it can really wreck some of the things you're trying to accomplish. And once December 31st is gone, there's not a lot we can do to go backwards. And remember, we used to be able to recharacterize conversions from IRAs to Roth IRAs. Now we cannot. So once the deed is done, it's over.
Yeah. So one of the things you have to think about with the tax code is the law of inertia, right? For every, and I hope this is the law of inertia. I could be wrong, but I will guarantee you this: for every action, there is an equal and opposite reaction. That is the best way to think about your tax code. And so the reason I would always encourage somebody to work with people who do sophisticated tax planning. And it's not that we cross any lines. We certainly don't go even into the gray. We use the tax code in its purity. What Ed Slott has been able to do is to gather the nation's foremost geeks, if you will. I'm officially a tax nerd, and puts us in a room. And so we come up with things that, as far as we know, we came up with the name Mega Roth. I worked with Ed to create the backdoor Roth IRA strategy. I think there were a group of us across the country that probably did that at the same time, so it hit. But some of these things that you hear about came out of the Ed Slott group. And the key thing is we don't do a Roth conversion a year, which is what you would probably do in your life. We do hundreds of Roth conversions. We have over $100 million of Roth IRA money that we have helped people create since it became available without an AGI restriction in 2010. By the way, that notice came out in 2007. So we've been very, very hands-on with this and ready to go. And it doesn't hurt to sit down and to get some guidance, get some professional insight, deal with somebody who's able to look at your situation without being in your shoes. They're a fiduciary. Their job, Grant's job, is to treat your money as if it were his and you were in the same situation, that he can remove the emotional consequence of all the things that are going on in your life and look at your financial situation to help you make the decision and to make sure when you're doing these tax strategies that your I's are dotted, T's are crossed. Go to yourlifeafterwork.com or 800-928-4001. Ask for Brittany. Get signed up for your Next Steps meeting. It's complimentary. We look forward to sitting down and sharing a cup of coffee with you.